Welcome to Bears in Exile. It is April the 19th, and we're going to take a look at the VIX. Now the VIX, a lot of people say that the VIX is oversold, it's fallen too far, and that isn't necessarily the case. Things can always fall farther. And it was only a few months ago that I personally had a little rule about the VIX, which was when the VIX hits 15, buy it. And that strategy certainly worked for a while, actually for a very long while. And I'm going to see if that's still the case. Here on the weekly of the VIX, you can see that the overall trend is very strong, and it is very bearish. We have the NDEs and things from the last couple of months, and it came through and it tested it. But even with that huge breakout that it had, you can see that the long-term trend, barely even budged. That's how strong the underlying bearish forces working on the VIX are. And here we are again. We've come down quite a bit in the last month, and a lot of people are saying, oh, it's gone too far. Well, the reason why it keeps going down is this long-term trend right here, and to break that, it's going to take extraordinary measures. Now, if going on to the daily, you see the NDEs trying to break it out, and sure enough, it did produce a flat line and a cross, but just as soon as that cross was made a bubble, and it snapped that sucker right back down while it was weak. And you'll notice that the long-term trend has crossed back over and is once again bearish. To match the short terms, which are also bearish. So you can see that when it came back down through, we had some irregularities here, i.e. a bubble. It came through, it repaired it, kept on going down. Doesn't even look like a bubble right here in the 2 days ago, but nonetheless, it came back up, tried to test the long term again, which it did test it. Was not strong enough, came back down, and the shortest term moving averages are now pointed down again, signaling that most likely this sucker is going to keep going down. Now there will be a bottom at some point. You can see people like to draw support and resistance. On the VIX it does work to some extent. My old rule of whenever it's at 15, buy it. You can see every time that it came down low, when it got to a certain level, you could snatch it up real quick, and sure enough, it would bounce, and you could make, pennies or dollars. And but we have this one line of resistance right here at the low of around about 1545, which is not very far beneath where we are now. So based upon the support and resistance, yes, you break that and it's a really bad thing. We actually did break it 2 days ago, low of 1492. So that's already been pierced. We have a new closing low of 1532. If you break 1532 and we're able to close below it, you have a new low on the VIX. Huge sell signal. And looking at the short-term and the long-term moving averages, that is extremely likely. And when that gives out, oh boy, that's a very bullish sign for the overall markets, and we could have a very large rally. Who knows where this could give out to should that happen. Looking on the 60-minute, we have a flat line of the long-term moving averages, and this sucker keeps trying to test it, and you'll notice that the long term has been able to hold it while there was separation, but when you have a flat line, that's very weak, it's very indecisive, and when you have a double flat line, you want to be very careful. It can whipsaw either direction in a significant way very, very quickly. And just in the last 2 days, we had a flat line with what could be a momentary double, but we are now underneath it. There is some separation of the short-term moving averages that is not uniform, but that could also just be the cross taking effect. But there could be a slight bubble right there, so there could be a little bit of a bounce. But in the 60-minute, there's a little bit of a bearish sentiment to it. I would think that because it is so low, people are buying it, and that is giving strength to this thing flatlining down here at the bottom, or what people think is a bottom. On the 30-minute, we get to see a little bit more of the volatility, and we do have a slight bubble right here in the immediate term on the 30-minute. So this is either going to need to correct up slightly and heal that bubble, or it's going to need to go sideways for a little bit longer to heal it. The longer term trend has turned down. There's not very much separation, so it is still vulnerable to something happening and bringing this back up to a test on the 30-minute. And on the 15-minute, we did have a bubble. It is smoothing out. It doesn't seem to be crossing back up for a flat line and a return for a test, so this is bearish. And the longer term trend is also expanding its separation, also bearish. And on the immediate 5-minute, we have consensus of price at 1582, which is to be expected since many people will think that this is the bottom of the VIX. Notice the separation of the longer term moving averages. It does look pretty strong. It looks very strong for 5 minutes actually. So I would say that the VIX definitely can move down from where it's at. It's very likely that it will move down from where it's at. If we do end up having a gap up tomorrow, you're going to see this thing just pull away from the bar and go down in a significant manner. That will probably form a bubble of some sort, but we don't know how far down that will be. In any case, it could gap down into a new low for the VIX, further confirming a sell and producing even more sell pressure. So very likely tomorrow we will see new low for the VIX. The charts definitely say that based upon the information that is provided to us by the charts. So neutral bearish 5-minute, bearish 15-minute, bearish 30-minute, bearish 60-minute, bearish daily, and the weekly definitely has a bearish overtone to it. Short-term moving average is neutral bearish. So there you go. There's the status of the VIX, and all the talk about VIX. This is it for the VIX. This is too low. It's gone down too far, too fast. Look at this thing. It is a mess. It is actually, we have lows down here in the 10s back in 2006, and you know, it definitely could go there. Breaks that, and if it breaks that previous low close, 1523 or whatever, you have an awful lot of room without a definite support, somewhere on the order of to 1291 area, 1220 area. So somewhere in the mid 12s, it could drop to before having real support. And this was so far back. is that even really support? Again, I'd actually think that it would find some support level before getting down to 12. That would be way down here. But you never know. I mean, this Bollinger Band line could go down with the move and really surprise some people. Really surprise the bears, and the bulls will be laughing to the bank. Even a reversal right here, if the market were to drop, it still has this long-term moving average to contend with, and you can see, you know, big NDEs of Japan, of Africa. They didn't even make this sucker budge and compress. A tiny bit of compression on the Japan one, but I mean, give me a break. If those can't break this thing, you know, what will it take to do so? And even look at the housing collapse and everything. It came up and it got sucked right back down. I think that the VIX is a loser. So there you have it. That's what the charts say, and that's my opinion. As always, all investing decisions are your own. This chart and this video are for educational, entertainment, and consumption of time purposes only. Please join us at bearsinexile.com and check out our forum, our other videos, and the other features that we have to offer. It is completely free. It's always going to be free, and we've set up shop. We're ready to roll. All that we need is you. Thank you very much.